All right, now we're talking back to work. Back to work. Markets are collapsing ahead of FOMC tomorrow afternoon. Now, if you're an experienced trader, you know this is where the fun begins. This is where the big money is made. We start seeing these big counter trend corrections. I'll tell you, moves like this afternoon give us plenty of ways to make money tomorrow, but you got to have the right strategy. I'm going to cover my favorite strategy, my favorite trades, of course, in the video tonight. By the time we're done this lesson, you'll have an easy roadmap to make money going to FOMC tomorrow afternoon. We have a lot to cover, one of the most important videos of the month at this point, possibly. Before we jump in, though, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section. Thank you so much for tuning in, supporting the channel. But enough of the intro, Joe. Let's get ready for Wednesday. FOMC is coming at us and markets are on the move. Now, starting off tonight here, as always, I got the Nasdaq triple Qs. I got the E-mini and the SPY in front of us. Now, guys, there are two very important clues that are really tipping us off to how to make money tomorrow. One of those clues is right in front of us, right on this 60-minute time frame. It's an overall bullish market on the 60-minute. That is clue number one. The next clue is a bit later on in this lesson. The next clue is on the tick charts, which we'll drill down to in a moment. Before we go to clue number two, though, let's double check our schedule for tomorrow, because tomorrow is another busy day. There are two things on my radar for tomorrow. The first thing tomorrow is we have a big block of news, 8:15, 8:30 tomorrow morning. We have the ADP employment number, but most importantly, the quarterly Treasury refunding announcement. We saw a taste of that yesterday afternoon. That'll be coming out tomorrow at 8:30 Eastern time. And the ECI number, the employment cost number, is also a very big potential market mover. That's the first thing on my radar tomorrow, and hopefully that will get us moving tomorrow ahead of the FOMC announcement, which again, the second thing tomorrow is the FOMC announcement at 2 o'clock Eastern time. Now, please remember, whenever we have major news in the afternoon, it puts a lot of pressure on us to be finding trades early, removing risk early. You really want to be careful getting into new positions, taking on more risk after 11:30, 11:45 tomorrow. So my mindset on an FOMC day is to get into trades early. We're going to watch the fireworks around 8:30. And we really have that block between 9 o'clock and noon Eastern time tomorrow to find our trades and make our money. So be aware of that. Those two items for tomorrow. We don't have any major earnings scheduled for tomorrow. We'll watch and see how bad Boeing messed everything up. But we don't really have any big earnings, of course, until we get the big Amazon, Apple, Meta earnings as we finish up earnings season later on this week. So no major earnings for tomorrow. But again, think about 8:30 tomorrow morning and 2 o'clock, 2:30 tomorrow afternoon. Those are the big items that we know about at this point. Now, let's get back to our charts, though, because we have a lot more to cover in this video. It's good to know when the news is, but we should know by now the money is made on the charts. Let's now cover my favorite trades here for tomorrow. Nasdaq's ready. S&P's ready. I mentioned earlier there's two important clues, right, on these charts right now. One of them is this insane bullish overall bias right now, right? That's clue number one. Let's now drill down to our tick charts. I trade off tick charts in our trade room. Upper left-hand corner, that's a 7,000 tick chart. And if you're watching for the first time right now, guys, this is the 21 EMA, in case you're here for the first time on the YouTube channel. There is another very, very important clue right on this tick chart, and that is that strong move down that we see here this afternoon. Now, I'm not going to worry about what caused it. It doesn't matter. All that matters is it's a strong move down. Now, what do we always talk about? What always happens whenever we see a strong move in one direction? What usually happens? We usually see a relatively deep pullback and a retest, in this case, of that high. When I get a strong move down like this, I expect a pullback and a retest of that low. Now, think about that overall bull bias we saw on the 60-minute. This is where we can anticipate double bottom reversals going back up into that range overhead. So knowing that we are overall bull market, but at the same time, seeing this very strong, sharp correction going lower, now there are plenty of ways to make money on this. With the right signal, I can buy during that pullback. We'll see if they hold the underbelly of that range. There's probably going to be some ways to short this thing on that move back down. I love the idea. I love the idea of buying that double bottom reversal. And you know these double bottom reversals, they love to squeeze running higher. There's probably easy ways to buy it with some bear traps running higher. That's really all you need to make money on this, in my opinion, tomorrow. If you want to go deeper into this, we have multiple ranges on the S&P chart. The Nasdaq is quite different. We'll get to that in a moment. We had a range earlier on in this week. It broke out into a new trading range. If you're taking my free video classes right now, we know that ranges act like magnets. The most recent range is the most important range. We also know whenever we break out of a previous range, we almost always pull back for a breakout pullback. So when you put that together, right, multiple ranges, previous range, think about that breakout pullback. We talk a lot about those on these videos. And of course, that new range up overhead. One very interesting part about this chart, we saw yesterday afternoon, we had what kind of surprised everybody when the market ripped higher about 2 o'clock Eastern time yesterday afternoon. It was kind of a surprise Treasury announcement. We're going to hear again tomorrow morning at 8:30 Eastern time. Oftentimes what happens though is whenever we see a surprise move like this, it kind of catches a lot of people off guard. So it wouldn't surprise me at all if we came all the way back, tapped that area, and then made our way back up into that trading range. So let's simplify this now. Let's create an easy way for us to make money with this. The most important thing right now is it's a strong shot lower. So we have to anticipate we're going to pull back and try to retest that low before we make that run going higher. If I want to be a buyer off the low, there's one type of entry pattern I'm going to use. We call them traps, or in this case, bear traps in our free trading course, and it will look a lot like this. As we start to pull back here, let's see if we can trap in some sellers. Remember that 60-minute time frame. We're not a bear market. If I can get some bears coming in, trying to chase this thing lower, right? You know that happens a lot. I made the mistake a lot when I was a rookie. If I can get those bears to chase, try once, try twice, higher high in price, and a move right below that low, that is what we call a bear trap. There's a lot of examples of those, right, in our free video classes. Now, that would be a great way to get in on that pullback. But we know whenever we have a strong move down like this, sellers are going to try to hold the underbelly of that range because range breakouts love to break out pullback. We mentioned that earlier. So now, as we go back up again, let's see if we can get some buyers coming in. And if I can get those buyers trying a couple times, I'd like to use what I call a 2-try failure pattern to short back down to retest the low. If we're lucky, we'll get a bull trap on the way back down to retest that low. Now, bull traps, remember, bull traps are going to be low in price and a trap above that high right there. Now, once we go back and retest, right, once we go back and take out that low, because again, that's what strong moves like to do, this is where that overall bullish 60-minute chart comes in handy now. Now, as we retest the low, what happens down here? Profit taking, right? Profit taking. All the sellers who sold on that breakout pullback off the trading range, they're probably taking the bulk of their profits somewhere down around that low. Now wait for more rookies. Get those bears to come in and give it a shot once, shot twice, and look for that 2-try failure for that squeeze running right back up into that range. And remember, when the market when they squeeze like this, you want to look for another one of those bear traps. So this is, in a nutshell, this is the roadmap I'm looking for tomorrow morning in our trade room. Again, it's an overall bull market with a strong run down. I'm expecting them to pull back and retest that low. And again, that overall bull market, I expect to take back over and make that run back up into that range overhead. And I love how this lines up right along with that previous range, that surprise treasury announcement. This would all come together very nicely. It's a bear trap pattern. It's a 2-try failure here off the underbelly of that range. It's a bull trap and then a beautiful, right, double bottom reversal. Again, 2-try for the bears. Trap those bears in, use their stops, right, to fuel that move going higher. And then as it runs higher, don't chase after it. You want that bear trap, that higher high in price and that trap below that low. Man, I'll tell you, I'm getting excited just talking this thing through. Now, let's slow down for a second, because I know that most of you guys watching right now have learned all these entry patterns. I know you're doing well with them because you guys give me such great feedback every week here on this YouTube channel. But if you're watching for the first time right now, this might be brand new. This might be way over your head. Bear traps, failures, range breakouts, rotations. Don't you worry. I teach all of these patterns. I have hundreds of examples of these setups on real charts, not just scribbles like this. It's all taught, all covered in my free video class. I'll put a link up here for you for our free trading classes. Grab that link, hit that link, because the strategy you'll learn in that video series will teach you a simple trick we use in our members trade room to know exactly where the best trades are going to be that day. And most importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money on your own. Guys, if you're not making consistent money right now, if you're tired of missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link up top there. Take that free course. It will give you an easy roadmap, and it will make these videos a whole lot easier to follow along and trade with the following day. Also, too, if you can't get that link up top there, I'll put all the important links in the description of the YouTube video. My free class links, I'll put them down there. We trade together every morning at 8 o'clock Eastern Time in our trade room. I'll put that information in the description. And also too, I'm on Twitter a lot during the day. If you're on Twitter, my handle there is in the description there as well. So all the important links, of course, are linked up in the description. Now, let's talk about if we end up continuing this roll going lower. I'm going to go to the Nasdaq in a moment. The Nasdaq is very similar, but it's also very different. So if you're a Nasdaq trader, I get you covered here in a moment. If we continue to roll and roll and roll going lower, what do we do in that scenario? Again, I would love to get down, trap some bears in, right? Get a bear trap down there and bounce back up, short back down, and double bottom back up again. I think that's the easy roadmap for tomorrow, but who knows, right? This may turn into a bloodbath going into that FOMC tomorrow as everybody takes risk off the table because of the uncertainty of the FOMC tomorrow. If we begin to pop and grind down like this, it's a very easy giveaway. Remember, anytime we see a strong move like this, expect a pullback, a retest, and then resume that overall bull trend. If it begins to grind down, if it grinds down like this, I no longer want to try picking that bottom. What I'll do is I'll mark off that low like this. I'll bring it up around that high. I'm going to look left and start looking at prior swings. And my goal is to get into something off the first test of that channel. And I'll show you guys some examples of this in the Nasdaq here in a moment. But this is always when my go-to. If it pops down and begins to grind running lower like that, find that channel off the lows, bring it up around that high, and then again, look left, look for a prior swing high, and that's usually where the best entries are going to be. It could be a bull trap above prior high. It could be a buyer failure into pullback combination. Again, this will all make a lot more sense to us once you go through that video class I mentioned earlier. Bull trap, buyer failure, right? We have, of course, the pullback combination. Now, a couple things about this one. We know where the market wants to go. Let's take out that, not Friday's low, but technically Sunday night's low, kind of the weekly low is right there. We run back down, right? Moving average comes over. We're now at support levels, again, in an overall bull market. We're not going to pick the bottom. right? We don't pick tops and bottoms, not on this channel. That's a rookie mistake. We do is we let the bears chase it. And once they start chasing it, there's that bear trap we want off of that low. And again, be prepared, right? Be prepared with all of that momentum going lower. Be prepared for it to make a run back down again. And again, that double bottom reversal, right, is my favorites off of that low. All right, guys? Now, real quickly, and then we'll jump over to the Nasdaq. If I'm wrong about this, if this thing V bottoms off that low and begins to rip, if it rips and kind of V bottoms off of that, there could be so many buyers waiting down there, an overall bull market. We may not get this thing. It may not pull back and go again, right? If it does that, if it begins to pop up and kind of grind and run higher, you know how to trade these, right? You don't chase it. That's the first thing. You never chase the grinders going higher. You find that new channel. You mark off that low, right? You look left. Find those prior swing lows now. And remember, at this point, you want to buy as low as you possibly can, right? We call these pop and grinds, right? If it reverses off of that low, I'll be looking for entries, be bear traps, seller failure patterns underneath the moving average, 21 EMA, and potentially some strength trades going higher from there. The amount we go below the range is the amount we go above the range that will give us an idea of where this market ultimately wants to go. That becomes our big objective on the opposite side of that trading range. Again, I'd love to get that bear trap to get in off of that low, but if we don't get it and it V bottoms, starts crushing, running higher, the goal is buy as low as you can, get underneath those lows. All right, guys? Now you know how we apply those two clues. Big overall bull trend, sharp move down on the tick chart. Let's now go to the Nasdaq here. The Nasdaq is similar in a lot of ways, but you'll see right away it's a bit different. Now, clue number one, it is a bullish overall bias. Don't worry too much about all the details in the 60-minute time frame. Just use that 60-minute to tell you what is the overall direction bias and filter our trades, or use that to weight our trades on the tick charts. Let's now drill down to our tick charts here now. And boy, oh boy, talk about a strong move down. Easy to see liquidation moves, right? People taking profit off the table right now ahead of big news coming later on in the week. There is one really, really big clue on this chart right now, and that is the size of that move down this afternoon. Anytime we see a big move in one direction, what do we always talk about? Anytime we see a big move in one direction, we expect a two-legged pullback and a retest of that low. Now, again, we're looking very bearish right now, but remember that 60-minute time frame. It's not an overall bear market. This is why I love that double bottom reversal. Again, like I mentioned on the S&P, if we time it right, if we can get that bear trap, we can buy during that pullback. We can then use, this of course is a previous range from today, right? That is the range we saw this afternoon. As I mentioned before on the S&P, whenever we have a range like this and we break out of a range, we simply use the right, what was support becomes resistance, and this becomes a breakout pullback zone. So again, with the right signal, we can buy that pullback, right, with that bear trap signal. As we go higher, again, with the right signal, I'm not going to try to pick that top. It may keep going, right? But if I can get that two-try failure we talked about on the S&P, and then again, back to retest that low. Once they take out that low, we should see a quite a bit more buyers enter the fold, because now, again, we're an overall bull market. The bears have retested, and now we can go out and get that run going higher. Look back here, right? Look back here. Good example back here. We saw that big move going lower. What do we expect? We see a big move in one direction, a two-legged pullback and a retest of that low. What happens in an overall bull market after you retest the low? Look for yourself. That's what happens in an overall bull market. Again, we're not a bear market, we're a bull market. That's what a 60-minute time frame is so valuable. So if we repeat what happened really less than a week ago, right? We repeat that. It's that bear trap, right? It's that bear trap because, again, we're not going to pick the bottom, but hopefully we're going to see a bunch of bears down here who are reading the headlines. The world's coming to an end. This time it's different. It probably isn't different this time, by the way. These things repeat over and over and over again. So turn off a television and trade the chart in front of you. They're lying to you. They want to make everything sound scary on CNBC, don't they, right? So we get that bear trap. We get that squeeze going back higher. And again, I have no idea, right? It may keep on going. It may keep on going. It's an overall bull market. But the odds, right? The numbers say they're going to hold this area. They're going to wind up trapping in some buyers. Again, I call these two-try failures. We let buyers try a couple times, right? Because again, we're an overall bull market. I look for a way to sell right into those stops, right? And we go back down to retest that low. Once we retest the low, now mission accomplished for the bears. Now the party starts back up for the buyers. Now again, I don't know how far that move will go, right? It may go a bit further until we take out that pendulum swing, right? The amount above the range, the amount below the range. We may keep going a bit further. However, what I do know though is this is a horrible place to be a seller. Right, you're an overall bull market. You're at support on the tick charts. There's no way I'm selling down there. But you know what's going to happen? There'll be a lot of rookies that will sell down there. And once they start getting short, once they commit, now I know where their pain is. Now I know, right? Now I know where I can squeeze their stops. And look again, right? We go lower, 1, 2. Look what happens when stops get triggered, right? It'll happen. And again, obviously, we'll wait until we get tomorrow. But that's the idea, right? The idea is trap those bears in and squeeze those stops running higher here, right? So it's the same game plan. It's the same game plan as we had on the S&P. And again, I mentioned that pendulum swing down here. That's kind of where it is, right? 17,361. If we continue to grind, again, all of that momentum now for the bears, draw off that low, pin up around those highs, look left, find some prior swings. Again, we're a bull market overall, but expect this thing to pull back and want to retest that low. And again, I'm looking for things like bull traps, buyer failures, pullback combos on the way back down to retest the low. Once we do take out that low, again, call in the rookies, right? Bears once, bears twice. Again, these are rookies down here. We know that, right? Professionals sell high. Rookies sell low. Professionals make the market come to them, right? Rookies chased after the market. I know because I was a rookie for like 5 years. Right? It took me a while to learn this stuff. That's why I really enjoy sharing this with you. If I can help shorten that learning curve for you, then my job will be well done. So we know that professionals are going to sell high. They'll be taking their profit down at that low. That's what we know, right? Situation where everyone is a buyer down there once those bears get stopped out, right? Stops get ripped, get hit, and we can grab that reversal back up off of that low, right? So if it does kind of collapse, right? If it really runs and keeps going lower, that pop and grind is the way that you want to trade it. And as I mentioned before on the S&P, right, we're expecting this thing to pull back and retest. But if for some reason it pulls back and just boing, right, and keeps going like this, the most important thing is we don't want to chase after it, right? We don't chase after it because the reason why the price bounces like that is because there are so many buyers buying down here, right? It's not because there's buyers buying up here, right? The buyers are buying low. They're squeezing out the sellers, and that's what creates these big V bottoms. Okay, the moral of the story is that you don't want to buy up here because eventually, once all the shorts get squeezed, right, the market will begin to run out of gas, right? It'll run out of momentum, and that's when you'll be waiting for that nice pullback. Mark off that high, mark off that low. And once this thing loses some steam, right? Once it runs out of ammunition, right, to keep going higher, once all the bears have been squeezed, the buyers have already got in, it'll start to stall out here. Now the real buyers come in, and the buyers want to buy as low as they can. They want to buy that trap, right, or that pullback, whatever you want to call it, right, off the low of that channel. And again, I'm keeping things pretty simple, right? And I'm trying to at least this is kind of a complex situation. But this will be, again, I want to get off the low of that channel. I want to be below a prior swing because that's where bear traps live. I want to get below the 21 moving average because that's where failures into pullback combinations live. And then remember, if we get that big V bar, if this thing can muster up the energy to reverse tomorrow, again, doesn't seem likely until we get to FOMC tomorrow afternoon, but I don't know what's going to happen, right? All I know is what the odds tell me. So if we do end up taking out, if we do end up kind of V bottoming off that low, think about now where the market wants to go. It's going to want to go all the way back up and take out that high. Most of the time, whenever we see a V bottom, usually that first leg and the third leg are symmetrical. All right, that's usually what happens. The first leg is always the measuring leg, always the measuring leg. All right, and then once we know how deep that pullback is, then we'll know how big that measuring leg will be. All right, but again, we know where the market wants to go at that point. It'll want to go out and take out that high. All right, guys. So I think now, hopefully that makes sense. The two big clues we have is the overall bullishness on the 60-minute. And of course, right, that big move down on the tick chart. The big move down says expect that deep pullback and that retest of that low. The long-term bull trend tells us we can buy with a bear trap. We can sell that breakout pullback. And again, love the idea of buying that double bottom reversal because those double bottom reversals tend to be very, very good to us in our trade room. All right. So keep an eye on that. And you know tomorrow, we get a bunch of big news tomorrow. You know there will be some curveballs, but this will be kind of our guiding principle for tomorrow in our trade room. Now, speaking of our trade room, tomorrow morning, we're going to get together and trade this stuff together. I can't think of any better way to learn to make money, consistent money in the markets, than doing it with me every morning at 8 o'clock Eastern time. I'll put all the important links. I'll put the free class links, the trade room membership links, my Twitter feed stuff, all down in the description. Hit me up in the description. And don't forget, if you have any questions or having trouble getting into our free video classes, any issues at all, please don't be a stranger. You can always call the office or use live chat. If you're having trouble with anything, definitely speak up. I can easily help get you access to our video classes or whatever you need help with along the way. All right, guys, hope you learned a bunch here tonight. I know I covered a lot, but again, that's why we get together tomorrow morning and trade this stuff together. Have a great rest of your evening. We'll see you tomorrow morning, 8 o'clock Eastern time in the trade. If not, we're going to come back tomorrow night, trade the reaction to FOMC, and get ready for the final hurrah of the earnings season for the first quarter. All right, guys, my name is Joseph. Thanks for being here. Be well. Be nice to each other out there. Let's make some money tomorrow, huh? Adios, amigos. Bye for now.